What's going on YouTube? Hey, it's Ben Nader, and you already know that this is the channel where we talk about recruiting, business, staffing, investment, entrepreneurship, all of that sort of thing. And if you like that, I vlog every single day on these topics. So become a subscriber, hit the subscribe button and the alert button down below so you know each and every time I come out with a video. Today, I'm gonna go over a topic that I wanna first give you a disclaimer on. I am not a CPA, I am not a tax advisor, I am not anything of the sort, I'm not a lawyer, so all of this is for entertainment purposes only, strictly for YouTube. Take this advice as you will, all that sort of stuff that goes in with that caveat, right? So let's get right into it. I want to talk today about money management. I realize this channel is evolving heavily, and I've got tons of subscribers that are asking questions around money management, money flow, income stream, what you do with taxes, and all that sort of stuff. And so I wanted to go right into it and give you some answers. First on the list, and I couldn't make this list without putting this first, is taxation itself. So in an ideal world, when you set up a business, you're going to be an LLC, which basically means that you are separated as a person from your business. Meaning if your business gets sued and loses all of its capital or all of its assets, you cannot personally be touched. You can't lose your house. You can't lose your car. You're basically personally separated from the business. So that's why you want an LLC. Aside from that, we're going to get right into just the taxation piece of it. So whether you're an LLC-C or an LLC-S, which is a whole nother video for going into the weeds about taxation and all the complication it creates, you're basically going to get taxed as a sole individual. So whatever you make for the year, you're going to get taxed at that rate that you come into. So there's different tax brackets, right? Some of them are 15%, I think they go up to 20, 25. For super rich, you get up into 35%, etc. I fall into about 25% as far as my tax bracket for what I made last year and what I'm on track for this year. So 25% is actually a really, really safe number. And it's not just for me saying it to you. I'm telling you that I would say for anything that you earn and have as income from your clients, I would put 25% of that aside. So if you made $10,000 by a couple placements with one company, I would put $2,500 into an account that you just let sit, and that money is for taxation purposes only. Of course, you can do whatever you want with it. You can utilize it to make other money, but understand at the end of the year, that $2,500 is owed to Uncle Sam, and they will come after you for it. So definitely be holding off 25% of your income, because that's generally where you're going to sit at. You might be a bit lower than that. You might, be lucky and not have to pay out that 25%, but generally 25% is a really, really safe bet on where you want to hold off your taxation amount. So keep 25% of what you earn, basically, is what I'm saying. The second thing I'm going to say is that your entire gross income is what gets taxed. So if you work a 9-to-5 currently and you're setting this business up as you go, you're also going to have a W-2 income, and normally you'll get a return from that W-2. Whatever return you get, if you started a business that, like I did, that made almost triple my salary while I was at the 9-to-5, basically what happens is your return, your measly return, which is going to be $2,500, $3,000, $4,000 or so, what you would have gotten will just go against what you owe. So it'll basically just subtract off of your actual tax burden. So that's how it works if you have a 9-to-5 and an LLC company that you're starting at the same time. Other than that, I want to advise people that, the IRS always knows what you make, okay? So when you work with a client, they're going to ask you for a form called a W-9. And a W-9 form basically says that we did business together, here's what we paid them, and here's what they did for us, period. And that basically gets issued to the IRS. That company gets to utilize that form to write off on their taxes. And basically you get from them a 1099 form, which states exactly what they paid you. And there is zero way that the IRS will not know what you got paid unless you're getting involved in very, very shady things that we will not discuss because you should not be doing them. So at any rate, the IRS knows everything, and just be aware of that. So the next thing I want to talk about, which is a little bit more bright than money going away, let's talk about money coming in. So reinvestment, right? So reinvestment is what you should be doing. In the first 6 months of my business, I made over $100,000, which was incredible. I was super pumped, really, really amped. And what I did with it was I started reinvesting. So I bought new tools, I bought software, I bought things that cost, a couple $1,000s. All things that would help me out. So we're talking about things like lead generation software. I'm talking about like new hardware. Like if I needed a new computer, I actually didn't, but if I needed a new computer, I would buy that, right? To help me out and make more business happen, right? Anything that you'd need to actually increase your business and help you out, those are the things that you need to reinvest that money into. And basically, it's just going to help you do more business, whether it be your clothes. I mean, it could be practically anything that you deem worthy of making you better and more business. So if it's like, just the ability to start taking people out to dinner, clients or whatever it might be. I don't know. I mean, I do everything digitally, but something like that, right? So reinvestment is a huge thing you want to do with your money when you get it. Now, this is going to slide directly into the next topic and final topic that I really want to talk about, which is tax write-offs. So as a business owner, owning your own LLC, being a sole proprietor, however you want to put it, you have the capability to write off tons of different things on your taxes. Now, what does a write-off actually mean? A lot of people believe that a write-off literally means if you buy a $4,000 computer, you don't have to pay $4,000 in would-be tax money. That's not true. So basically the way a write-off works is essentially it's a equation the IRS does. They take the amount of whatever the thing that you bought, let's say it's a computer and it was like $4,000. They basically do a simple equation with it, and essentially it ends up being about half or less than half, a little bit under half of what the actual item that you're writing off is, goes off of your tax burden. So if you spent $4,000, you might get $1,200 knocked off your tax bill. That's how it works. It doesn't work like, you buy a $40,000 car and automatically you don't have to pay $40,000 in taxes. People think that's not the truth, and I hope that shakes out some rumors right there. Again, as far as write-offs, you can literally write off a billion different things. I'm not going to go through everything, but I will go through a few. So your cell phone bill, your cell phone itself, your computer, your lead generation software. So if you pay, $5,000 for Zoom info, you can write that off. If you actually bought a car, you use a car to entertain clients and drive around and, show up places, and you can prove that more than 50% of the usage of the vehicle is, for business, you're able to write that off and write off interest. You can do all sorts of things. You get a home office credit. I have a home office I'm working in right now. I also have a WeWork office, but in my home office, I'll get a credit because the home office I have meets a certain square footage criteria that the IRS has set, and therefore I'm able to write that off and get a credit off of my taxes for that. Like I said, again, your internet bill, your cell phone bill, cell phone itself, all sorts of hardware, lead generation tools, literally clothes, meals, transportation, mileage, parking. We can go on and on. There's literally everything under the sun. A big thing for recruiting is advertising. So I think last year I had a burden of about $15,000 worth of advertising. That was through Craigslist, Indeed, Monster, just all kinds of things that I used. And it was about $15,000. So I threw that in. That was a write-off. Anything that basically you utilize to do business that's a cost to you is available as a write-off. Now, again, you're going to want to talk to your CPA specifically about each and every one of these write-offs to make sure that you're not going to, go overboard with it, right? Because there are rules, there are regulations, they will catch you. The IRS does know everything, and they will stop and say, wait a minute, you actually can't write this off, and they'll come back and it'll be a huge hassle. You don't want to deal with it. So that's write-offs, but you ultimately want to keep track. The biggest thing about write-offs is that you want to keep track of everything that you're writing off, because at the end of the day, it does have to be provable, right? You have to actually, defend what you're writing off. So I bought the camera I'm filming this on right now for about $1,000, and I have the receipt sitting in a box right to the left of me. So if anybody ever asked, hey, you use your camera for business, right? Yeah, I do. Okay, well, where's the receipt for it? Well, I have the receipt, so it's defendable. So anyways, not to go more in the weeds about it or anything, but just be smart. Think long term. So when I first started getting into staffing, and I got one of my first deals that I ever got was a $37,000 deal for hiring some transportation, some truck drivers. And I could have blown all that money, right? But first things first is I put away the tax money that I knew I'd have to pay. And then the second thing I did after that is I banked it. I just put it in the bank, right? And then the third thing after that is I started doing contract staffing. And guess what? I used that cash to basically float money to my contractors so that I can pay their own payroll. And I'm not using a payroll company that charges me 3-4% and lose money on the deal. I'm using that money to pay contractors. So, when you get money in the bank, right, just be smart about it. Open up a Roth IRA that you can contribute $5,500 a year into, and at age 60 you're going to have $1 million in there if you're 18, or if you're 25 you're going to have maybe $800,000 in there. Be smart. Once you start getting a higher income and you're getting big checks and things like that, you've got to be smart with it, and you have to be really, really intentional. Think long term. This is a long game, long play here, right? So when you get a $30,000 check, don't think about what you're doing with it tomorrow. Think about what you're doing with it in the next 3, 4, 5, 10, 15 years. If you get something like $30,000, ultimately that money can make you millions, just by using things in the right way, investing in the right way. You might want to get into real estate. So that could be a good portion of your down payment for a rental property that you want to buy and start getting into real estate investing, right? So just be smart about things, understand what you need and what you don't need. Health insurance, is a big thing. If you're going to be a solopreneur, right? Nobody's paying your health plan. You're not a 9-to-5er anymore. So you have to pay for your own health plan. You have to buy your own health insurance. That's $300, $400, $500 a month, depending on whatever plan you choose, or you go without health insurance and you're illegal and you have to pay, a fine for that. But at any rate, you're going to pay for things like that. So you have to think about it. So just be smart with what you're doing with your money management. And I know that this is a really just like crash course on hey, what to do once you start making money, right? But if you have questions about this kind of stuff, throw them all in the comments. If you think this is valuable, smash the like button. I would definitely appreciate it. And that's all I got today, guys, for Saturday. So I just want to throw that out there. I think it's really, really important for you guys to know exactly what you're doing with your money, and how you're going to manage it when you do start getting that money, because it will happen if you're applying yourself and if you're actually getting your business off the ground. You are going to start making real money, and we're not talking 9-to-5 money. We're talking about some serious money. And when you make that money, you got to be smart with it, and you have to manage it in a certain way. So anyways, I will catch you guys tomorrow on Sunday. Hope you're all having a great weekend, and take care.